Trump crashes the market again. Well, so do not panic, or at least be careful, but do not panic. So I'm Edifoto Farman, and today we are going to deep dive like what happened yesterday in the market, why all the stocks are actually red today, and what we should do in terms of strategy with our portfolio. So let's get started. Okay, so what really happened in the market yesterday? I think that all of you have seen the news that actually Trump got like its famous tweet or famous post on social truth, and basically like he was quite concerned about the export control from China, and I didn't get very angry about the recent news about China export control, especially on rare earths. And basically what happened is that he decided to actually put again some new 100% tariff on China, and this actually spooked the market because as we've seen, like just after this news, the market started tanking and we have seen all stock actually like sell off. So, well, I think that beyond this news that this is actually also some kind of sentiment shift. The market was actually well overdue for a correction, and what we are seeing today is actually a comeback to a certain fairness in the market or a certain realism. What really matters is that we are seeing actually a sell-off in basically all sectors in risky asset or risk-off assets, and this really shows that a lot of people have been deleveraging about this news, because what we can see is that this is more than just the news about the tariff, but this is also some kind of sentiment change. And I think a lot of people, they want to take their profit, they want to get out of this overvalued market, and this is what we are seeing basically today. So how should we position ourselves in this environment? Well, I think that we should be very cautious because what we are seeing is basically a sentiment change, meaning that a lot of people are going to continue to sell, but we should not panic. We should continue to keep our portfolio structures as always. We should keep with the strategy that we had before, meaning that being a little bit defensive with value name and try to avoid the hype in this overvalued name like Palantir or CoreWeave, for example, and to continue with the strategy. I think that this is the best move today, especially that this is not confirmed that this is going to be a broad sell-off for like multiple days, and this is the end of the bull market. I think that everybody should be very careful in this market, because especially if you are playing with option or like 10 or time sensitive instruments, I think this is going to be very dangerous, because I think that going forward the market is going to be very choppy, meaning that we are going to have very green days and very red days. Well, because that there are a lot of people who still want this bull market to continue, but there are a lot of people, as we have seen today, who want to deleverage their portfolio, and we are going to see massive sell-off I think on a periodic basis in the next few months. But as always, so all these sell-off, they are always followed by buying the dip from a lot of different actors in the market. So we are going to see very green days as well. So like, I think that's why you should not panic sell everything you have. This has never ever been a good solution or a good strategy in the market. So we should continue to invest as we have done before, to try to find value and opportunities in the market and keep the portfolio structures as we have. Having said all of that, well, today alone does not indicate us if we are ending this bull market or if we are just taking a breather. So we should actually be careful, and we should still remain observant of what's happening in the market. Why I'm saying that? Because we have seen a sell-off in both risky names like Palantir, for example, but also in like value name or defensive names like PayPal, for example, or UnitedHealth Group. And so this shows us that everything has been sold today. And surprisingly, like for example, PayPal has been sold more than risky assets like Palantir, for example. But we have seen also in crypto, there has been a wide sell-off. We have seen names like BMNR, for example, or SBET actually taking a huge toll. So this shows you that there is a lot of uncertainty of what's going to happen in the market. So I think that today to take a decision is a bit hard, but we should actually see what's coming in the next few trading sessions to really see what the sentiment change in the market. Are we still in the exuberant phase where basically like all the risky names, very high beta names are still going to dominate the market, or if we are going to see like some kind of rotation, and this is where we should actually be in more defensive names. Defensive names could be like UNH or Elevance, for example, but could also be like names like Verizon or much more defensive name in nature. So that's why today I think that we should not panic, we should not sell everything, but we should be very, very careful, because the direction that the market is going to actually take is very uncertain, especially with all these announcements from Donald Trump and all the different threats that has been made in the market between China and between the United States. And so coming back to China, so obviously like this is the elephant in the room. So I think that a lot of investors have been caught up in the hype of Alibaba very recently, meaning that that a lot of people have gotten into the name. So we have been in the name so for quite some time now. So we have rode the way from 100 or even from $80 up to $180. So basically, so there has been a lot of I think hype, a lot of maybe over optimism on the name. We should always remind ourselves that not everything goes up all the time, and I think that this is kind of a deserved breather for the Chinese stocks today, especially after such a huge run up in the past few months, especially for Alibaba and stocks like Baidu, for example. I think that long-term Alibaba remains a Chinese AI leader, and I think that what people have not fully grasped, I think today, is that the move by China to restrict the export on rare earths means that they are very confident that they are going to be able to cripple the United States in terms of chip development, and that they have what they need. That's why I think that people should realize that Alibaba is going to be a huge beneficiary in the next few years from the rise of independence in China in terms of AI. And so that's why I think that Alibaba is still a good play, is still a good name to keep exposure towards Chinese stock, because the Chinese economy is going to continue to grow as well. It's in the bull market today, and this is also a very huge AI play. We have also like stocks like JD.com, who should actually benefit from the expansion of the Chinese economy, but which has also been battered down very recently. So what we are seeing is kind of like profit taking, and like a lot of people like being very wary about Chinese stocks. But we should see like in the coming months as well, people coming back to these names, because the bull market in China is not over, and the move by the Chinese government by restricting this rare earth export shows a lot of strength and a lot of confidence in basically the Chinese government, that they are going to be able to dominate in terms of AI, and that they are going to become much more independent in terms of AI chip manufacturing. Now, what am I doing with my portfolio in this environment? So basically, I continue the strategy as I said. So we stay in names that are very opportunistic in nature, which are actually geared toward value, and which are going to benefit into long-term trends, basically. And when I say long-term trends, I mean like trends that we can see that are going to change in terms of structure of profit for these companies. So, well, to be a bit more concrete, so basically, like we are going to continue to have exposure to China. So through Alibaba and through JD.com, I think that this should actually take a good place in our portfolio, because like I definitely think that the Chinese economy is going to benefit companies like Alibaba and JD.com. As international investors, I understand that American investors are very worried about the fact that Alibaba and JD.com may be delisted in the US. But if you are an international investor outside of the US, I think that you need exposure to China. I mean, this doesn't make sense to have all of your basket into American stocks, especially that today we are going to see the rise of the Chinese influence towards a lot of different countries. And I think that the Chinese stock market is going to benefit tremendously from investors from all around the world. Well, having said that, so we are keeping Chinese exposure. We are also keeping exposure to manage healthcare through UNH and through Elevance. I think that they are still very good play. We are seeing that they are going to reprice their plans in 2026. They are going to become much more profitable. So in the next few years, they are going to be a turnaround into these different plays, and the value is definitely there. So I think that people should actually stay in this type of names, because the value is there, and this is going to be recognized if we have a bull market or if we have a bear market anyways. Obviously, like all the names I'm going to mention, they might actually take a beating if we have a deep bear market, or if we have a lot of panic in the market. That's normal. I mean, it's always the case when there is a broad sell-off, everybody's selling off, as we have seen with PayPal today. So it's difficult to actually hide into this value name. And speaking of PayPal, I think that I'm still keeping a position as well. So in PayPal, why? Because mathematically, this is a very, very good setup for PayPal. I think they are still going to continue to grow. They are still going to benefit from all the different initiatives that they have, especially with like stable coins, especially with the ads business. I think the ads business is very, very undervalued today at PayPal, and they're going to surprise a lot of people. I think when they're going to report that they're going to reaccelerate growth, especially coming from Braintree. And so that's why I think that PayPal is still in this market a very good opportunity. And the fact that the stock actually lost like 8% of its value today is actually a great opportunity for the management to buy back and to continue to buy back the shares of PayPal at a very large discount. And so having said that, so we have also other opportunities that we are seeing. I think that with Novo Nordisk, for example, so I think that this play is going to work very well, especially when they're going to come up in the market with oral GLP-1. And so that's why I think that we are still continuing with the same type of stock, so with a lot of values and which has been beaten down by the market already. We also have exposure to some AI leaders, so with Google and Amazon. So I think that Amazon has been also like not performing very well, but it should actually benefit a lot from the usage of Anthropic Cloud going forward, and we are going to see reacceleration in terms of AWS growth, and this is going to be seen very, very well by the market, I think, in the next quarters. I think a lot of people are assimilating this capex with only AI capex, but Amazon is going to surprise a lot of people because they're not only building data centers, they are building a lot of automation in their warehouses and outside of the warehouse, and this is going to benefit tremendously in terms of margin improvement in the next quarters or in the next few years. We're also in Google. I think Google is definitely the best AI play today in the market. We have seen that for months now. We have said that when it was at $150. We are still saying that when it's $240. Well, obviously, because the stock price has increased, so the opportunity is less attractive as what it was before. But now we have more certainty about the fact that Google is going to dominate the AI race. In terms of Google search, we have seen some figures showing that Google search is actually reaccelerating a little bit. I think that we should not be too caught up into the hype. I think that Google search by itself is going to die off very, very slowly. I think this is the nature of the technology and we should be prepared for it. So I think that in the Google thesis, basically, you should focus more on AI than on Google search. Google search is going to fund the dominance of Google in terms of AI and AI in different products. So having said that, so as you can see, so this is the way we are continuing our portfolio. So we are remaining defensive by nature. We are looking at a lot of values and we are looking at AI plays, but AI plays that can benefit in any type of environment. So what type of stock we are not having in the portfolio? So AI plays that are going to actually explode when the AI capex boom is going to end and when there's going to be a lot of concern from investors. So this means that plays like basically Nebius or CoreWeave or RN, for example. So don't be caught up in this bubble because these companies are going to suffer tremendously when the music stops. And we have seen a lot of concerns from investors about round tripping. I've heard a lot of people saying that this round tripping is normal. A lot of companies are doing that, but the scale to which it has been done today, especially when we are seeing the deals between OpenAI and AMD or the deals between NVIDIA and OpenAI, I mean, there are a lot of things that does not make sense. And when it's the case, well, it means that there's an issue and we are going to see down the road that this is not going to be sustainable. I think that OpenAI is driving a lot of commitment, a lot of investment that are not going to generate any specific ROI for a lot of different companies. So today we are seeing actually a very high cycle for companies like NVIDIA and AMD. One thing that you should not forget, these companies, they are cyclical. They have always been cyclical and they will always be cyclical. Semiconductors have always been the case, and I think that people kind of forget that all the time. But the reality is that, okay, so NVIDIA is at the top of the cycle today, and AMD is also benefiting a lot, but definitely, as always, we are going to see a lot in terms of supply for these different chips. I don't know when it's going to actually come, but the reality is that the investment behind the different projects that we have seen lately are not in line with the profits that are going to be generated by companies using AI. And I think that people, they should remember that. I mean, who is supposed to benefit from AI in the first place? They are the normal companies serving the normal economy. And so if the economy weakens and there's not such a need for AI in terms of improvement, so I mean, it doesn't make sense for such companies to actually spend trillions of dollars for other companies not to be able to benefit at all. And so we are going to see that, because I think that the main users of AI today are basically AI startups, and what we are seeing is that a lot of use of AI are not really generating a lot of impact in terms of economy. And we have seen that with the GDP of the US, where there is this study from Harvard where basically what we are seeing is that the GDP of the US would have been flat if it was not for data centers. So this shows you that the economy is not as strong, I would say, underlying all the investments in terms of AI. And if we continue down this path, we are going to see like more and more weakness in terms of economy in the US, and that could not actually benefit from the AI part. So AI is going to replace a lot of jobs, yes, and this is actually quite concerning, I think, for the economy, but also for the investments in terms of capex, because not all of this investment is going to generate profit for people ultimately. Well, so a lot have been said, so let's try to recap what the situation today. So Trump crashed the market with his announcement of 100% tariffs on China after the rare earth export control coming from China. So we have seen the market, so basically S&P 500, Nasdaq slide more than 3 to 4%. And I think that on Monday we are going to continue to actually see some weakness in the market. But what we are seeing today is that we should not panic, but we should be very careful, and we should see which direction the market is taking. Meaning that, is it a breather in the bull market, or is it a real sentiment change that is going to bring the market minus 10% or minus 15% going forward? So this is not a 2008 crash or 2000 crash, definitely not. But if we continue to see some weakness in the market, so what we do not want to do is to be overexposed into names that are way too risky for our portfolio, and we should actually try to look for value and defensive stocks today in the market. So that was my take today on what happened on Friday. So if you want an analysis like this one, please check my other videos. Tell me what you think about basically what Trump did in the comments, and if you like this, so please subscribe, and I see you in another one. Bye.